Yo, what's up, guys? It's Trader X again, coming to you from Soweto. So, welcome to it. Welcome to trading supply and demand in Forex. Why time means money, right? So, if this is your first time joining us, I suggest that you go back and you watch two of the videos that were uploaded prior to this one. Those being trading supply and demand in Forex, why the trend matters, as well as trading supply and demand in Forex, how the banks or the market makers trade. All right, so what do I mean by time means money? All right, so to put it mildly for everybody is how long price spends away from a zone until it comes back in time wise or time wise essentially, right? So that's what we need to be take cognizant of or be cognizant of. We need to be aware of how long price actually takes or moves away from the particular zone until it comes back for 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 our trade to have that higher probability of working out essentially. So it's one of those key things that you need to know in order for your trade to be a successful one, right? So let's go back to conventional supply and demand. So conventional supply and demand always tells us now once price is established a zone right up there, right, and it shoots all the way out, how far it travels is actually key, and that's right. The only thing that they never tell us is how long we need to wait until price comes back into the zone itself, time wise, right? And I'm here to answer that. Now, you all know me that I trade off of the daily chart. I follow my trend off the daily chart, and it trickles down to the 4 hour, right, and then it trickles down to the 1 hour chart. But I operate predominantly on the 4 hour chart and the hourly chart while I follow the daily chart, right? The daily chart is just for my trend essentially, and I follow the 4 hour chart and the hourly chart. So I get first zones that I would get would be on the hourly chart, and if they don't respect what we're talking about, the time that it needs to return to the zone on the hourly chart, I'll go over to the 4 hour chart. If it doesn't respect that, I'll go over to the daily chart, right? And normally what would happen is if you get a zone on the hourly chart and it far exceeds the time that I'm going to give you now, it far exceeds the return time, that zone will exist on the 4 hour chart, right? And if that exceeds that time, that zone will exist on the hourly, on the daily chart rather, right? So what are the times that I'm talking about? The return times that I'm talking about. All right, so get your pen and your pads out so you can take notes. On the daily chart, I want price to come back within 30 days, right? So it has to come back within 30 days. Now, before I go over to the other ones, I need to point out, side note, that this is merely a guideline, right? So I give it a little bit of room to breathe sometimes. I give a little leeway, a little bit of leeway. So I'd sometimes go to about 31 days, but no more than that. I can't, make exceptions every single time, say price comes back within the 32nd day. I wouldn't take that trade. So the only exception that I would make is 31, right? So it has to come back. For me, it has to come back within 30 days, and I'd really be pushing it if it comes back on the 31st, on the 31st day, right? And then on the 4 hour charts, I want it to come back. It has to come back within 5 to 6 days, right? 5 to 6 days, right? So price has to come back within the zone between 5 and 6 days. So it has to take. It can spend 5 or 6 days. Well, not five. It can spend 3, 2, 1 day away from the zone itself, but it has to come back within those 5 to 6 days, right? And on the hourly chart, it has to come back within 24 hours. It has to come back within 24 hours. Like I said, I operate on the hourly chart, so I normally scan my charts for zones on the hourly chart, and I wait for them to come back within 24 hours. More often than not, they come back way earlier than that. More often than not, they come back way earlier than that, and therefore I'm always in the markets because I look at a number of currency pairs, the majors, and some of my favorite currency pairs, right? Yeah, so that's all there is to it, guys. Can you believe it? That's all there is to it. Hourly chart has to come back within 24 hours. 4 hour chart has to come back within 5 to 6 days, and the daily chart has to come back within 30 days, right? Another thing why I like this or why I use this, actually, not why I use this, why you need to stick to this is it prevents you from taking trades that potentially, I can't say it makes you make better decisions in the market, right? Let's put it at that. It lets you make better decisions in the market. For instance, let me jump into the charts here quick. For instance, what is this? USD ZAR. Fantastic. So this is the dollar South African rand, right? I want to show you a setup that I'm talking about here. To any normal supply and demand trader, this would have been a nice zone, right? We're looking at the daily chart. This would have been a nice zone, right? Remember, conventional supply and demand tells us the further price moves away from the zone, that's perfect, right? The chances of price, well, the chances of that zone working out increase because, it spent more than 3 times the size of the zone away from the zone itself. And as you can see here, that's not the case. Price just blows past that zone like it never even existed in the first place, right? Don't pay the gap into mind here. Don't pay the gap into mind. I just want to show you why it will stop you from making bad decisions in the market itself. Because when zones like this actually pop up, and they do not fit into, or price does not come back within the specified time, then you can't trade that particular trade. And in this case, you would have actually stayed out of this trade because look here, it broke up, price broke out here, and when it came back into the zone, it was 40 days later already. Now we already know we make an exception for 31 days, but this is way over that, 9 days later from the 31, right? So you wouldn't have taken this trade. And look here, price just, it blows past the zone like it never ever existed. So you understand how you would have actually stayed out of the zone purely based on that, right? Versus someone who just really doesn't know. If somebody who didn't know that, time, how long price actually spends away from the zone, how in time wise, if somebody didn't know the information that I'm giving you right now and they saw price do this, if I can just grab your attention to the far right of the screen, and they saw price do this, they would have jumped in on the trade. You know what I mean? When I started trading supply and demand, I would have jumped in on this trade here. I would have jumped in on this trade, and this would have happened, and I would have been like, but supply and demand does not work. You know what I mean? It doesn't work. I mean, look here. That zone has everything going for it. Look here. We've got higher lows here. It's got everything going for it. We've got higher lows right here, right? And then right after that zone has been established, we've got a lower low. This is a first sign that price is about to reverse to the downside, right? So anybody who just doesn't have this information would have taken this trade right up here, and they would have been burnt. Whereas had they known that its price has been away from the zone way more than the 30 days that we're looking for, the 30 or the 31 days that we wanted to come back into the zone for, they would have not traded this particular setup. They would have stayed out of the market itself completely. You know what I mean? So let's go into the charts. Let's take a look and see if let's just go into the charts. Let's plot some supply and demand zones, and I just want to show you how this actually results in more trades that you could actually win, more trades that you could win. For instance, we're looking at, this is a daily chart that we're looking at, right? So we're looking left, we're in a downtrend, we're looking left here. We're looking for rally based drops, right? Because we're in a downtrend. So the first one that I see here is actually this zone here. I don't know if anybody can see that, but that's a zone right there. And take a look after the breakout. Price came back 2 days later. And on the third day, price shot all the way down. That is a zone. So let me explode that a little bit so you can take a look. Auto snap off. So you can clearly see that this is a zone right here. This is a zone right here, and I would have taken this zone here. Another thing that I want to, it's actually not going to discuss right now, but it is a topic for another day, right? Is how far price travels after it has established its zone. Like I said, conventional supply and demand always tells us that we want price to move at least 3 times away from the zone, at least 3 times the size of the zone before it comes back to the zone. That's not necessarily true. More often than not, you will leave trades that look like this. You know what I mean? You will leave these types of trades behind. You wouldn't take these trades purely on the basis that, once price established that zone, it just did not move three times, or it did not, you know, go all the way down more than three times the size of the zone itself. So therefore, you would have left this particular trade here. You know what I mean? Irrespective of the fact that we're in a downtrend, and yeah, the trend will carry the trade itself. All of that goes out the window only because of how far price actually had to travel. So it's not necessarily true, but we'll discuss that in the next video, in another tutorial rather. I can't say next because I've got plans for the next video or next tutorial, right? So you can clearly see what happens there. A zone gets established real quick, and then price comes back in there real quick, right? Before it shoots all the way down, right? And this happens almost all the time. If you find zones, it happens almost all the time. Okay, I'm not finding any nice ones here, but let's go over to the 4 hour chart and let's see what we can find here on the 4 hour chart, so I can illustrate the 5 to 6 days, right? So auto snap to current price. Here we go. So let's see here. What are we looking at here? So if you trade drop base drop, or rally base rally, I see a trade here that would have actually worked out. Some people don't trade drop base rallies and rally base, I mean drop base drop, as well as rally base rally. Some people don't trade those, but if you did, right, this would have actually worked out. So you can also see that after price left the zone itself, it came back quickly, and that's really what you want to see. You want to see price come back very, very quick for that zone before it continues on its way down, right? Before it continues on its way down, because remember, if we're in an uptrend or a downtrend, right, the banks and the market makers are essentially marking up or marking down prices from one point to the next, right? So the sooner price comes back to a zone, the more probability, or the higher the chances of your trade actually working out, because the market makers and the banks are still in that campaign to move prices in that particular direction. You understand what I'm trying to say? So in a downtrend, you want to see price come back for zones almost immediately and within that time frame that I've actually mentioned for all three of the time frames themselves. Now remember, if you trade any smaller intraday time frames, I would suggest, because I'm not quite too sure what the times are, return times are for the 30 minute, the 15 and the 5 minute. I'm not too sure. What I can tell you though about the monthly, which is the only one I know now, in addition to the weekly, daily and the 4 hour, is that the monthly chart, it has to come back within a year. Anything below the hourly, unfortunately I don't have the answer for you. So you'd have to go out and find that out on your own, right? But you know this is all I got. So let's move back again and let's see if we can find some more trades here that actually worked out, some more trades that worked out. Let's see, I've got a zone here. No, not really, not really. So let's move back again. Let's see if we find any more zones. No zones right there. Any more zones? I see a zone right here. So take a look how quick price actually came back for that zone before the markdown happened, right? And right below that, we've got that drop, base, drop again. Price comes back. You can clearly see, you don't even need to count, you know, the candles or the sessions themselves, because price comes back very, very quick, and then it continues on the trend itself. Now take a look at this one here. This one here on the 4 hour chart, this is let me see, this is well over the 5 to 6 days. This is well over 5 to 6 days. So normally what I would do here is I'd go over to a higher time frame and take a look and see if I have a zone. So we do have a zone here, but there's a problem with this trade. It's a counter trend trade, right? It's a counter trend trade. So I wouldn't be taking it based on the daily chart, right? But if on the 4 hour chart it had come back within the 5 to 6 days to this zone here, I would have taken it. This is a successful trade based on the 4 hour chart, right? It's a successful trade, but it came back later. And this is not something that I would have actually taken. Instead, I would have waited for price to continue on its trend again here for even bigger profits, and here, because remember, you're trading with the banks, right? You're trading with the market makers. Remember, when they mark up prices, you want to be transacting like them. You want to also be buying when they mark up prices. When they mark down prices, you want to be selling and such, right? So that's what I would do. Now I want to show you another one on dollar yen. This was on the hourly chart, right? I want to show you another one. This one is really levels within a level, right? So supply, was it supply? Yeah, it was supply zones within supply zones, essentially, right? So on the hourly chart, what I had noticed, and I know a lot of people in the Telegram chat group actually noticed this one here. As you can see, this was a beautiful zone, right? If you look to the left here, if you look to the left, price left the zone quite nicely. It left the zone quite nicely. It left us a beautiful zone for us to trade off of. But as you can see, price spent a considerable amount of time away from the zone itself. I mean, 24, it was supposed to come back within 24 hours. And this candle here is when it was supposed to come back. This bearish candle here, this big bearish candle. That's when it was supposed to come back, would have been back to the zone, and only then would we have taken it, right? But all is not lost. So when we saw this move happen here to the upside, when this move started happening here, we would have taken note of the zone here to the left, right? Now remember what I said. When price does not come back within that specified time on the time frame that you're looking at, in this case it's the hourly chart, we move over to the 4-hour chart, right? And we hope that at the 4-hour chart we still have a zone right up there, right? This is not a zone that I would have taken, and that's a topic for another day. We'll talk about that, different zones. But however, if this was a nice zone that piqued my interest, right, I would have drawn my box also around that to just see if it complies with the return time as well, and breakout. And this is well over the 5 days as well, 5 to 6 days. So what happens next? We move over to the daily chart. Now when we move over to the daily chart, we've got a zone, right? We've got a zone, which is fantastic. We've got a zone. I wrap my lines around the zone itself, and I wait for price to come back in there, right? But now you need to remember, on the hourly chart we had a very beautiful zone right up there, right? Now that we see that we have a zone on the daily chart, right, like this here, this basically says to me I can refine my entry as opposed to me settling for this entry here, because remember we enter at the proximal line, which is right there. Instead of me settling for this entry here on the daily, I can refine my entry. So if I had a zone on the 4-hour chart, I would have drawn my zone on the 4-hour. Oh, there we go. I would have drawn my zone on the 4-hour chart. So for instance, let's just assuming that this was a good zone, right, that I would have taken, or you wanted to take. Let's give that a different color. So let's make that whatever this color is, orange red, and it turns purple. So in this purple zone, right, so that will be the 4-hour zone, right? So now you can clearly see that we have a daily entry right there, and now we have a 4-hour entry. So this is just refining our entries, right? But you still remember we have a beautiful zone also on the hourly chart, right? So if you go over to the hourly chart, and there is our other zone in that green box right up there. Our other zone right there. I think we should change the color on this one too. So let's make this, it really doesn't matter, right? Let's make this, it really doesn't matter. Let's see how it turns out. There we go. And that, whatever color that is. So you see, when you get a zone on the hourly chart that expires, and you get another zone on the 4-hour chart that expires, meaning it exceeds the return times on both time frames, and you go over to the daily chart and it's a valid one, you can go back to the 4-hour and the hourly chart and refine your entries, right? So instead of us settling for this 4 hour entry, we would settle for the daily entry. I mean the hourly entry. And if I remove these two zones here and leave just the hourly zone, we can clearly see that price actually had a nice reaction to that hourly zone. And guess what? Money. So levels within levels exist, and normally when this happens, it's normally a key market reversal essentially. But in this case, it wasn't really a key market reversal. It was just a reaction. It was just a nice big reaction, and you could have made a lot of money based on the hourly chart or the 4 hour chart, even the daily chart, in fact, as well. Though price would have moved down for a couple of days, not really a couple of days, but for a few days. Either way, so what I wanted to show you there is, when one time frame or one zone does not respect the return time, then you can move over to a bigger time frame. And if that does not respect its time, you move over to another bigger time frame, until you get to, a good one, until you get one that complies with the time frame. No, not the time frame, the return time. Then can you take the trade? And if it does comply with it, you can go back to the smaller time frames and try to refine your entry, right? Sometimes what would happen is price would go into those zones, but it would not really go all the way to, say, the hourly zone, or the 4 hour zone, but it will still penetrate the zone itself. Once it penetrates that zone, all you can do now is use the current, not the current, but use the valid time frame entry by means of a sell stop or buy stop essentially. So when price comes back again, having a reaction to that zone, it can pick up your trade on its way down or on its way up, right? As opposed to just leaving a pending order right up there, right? So that's it, guys. Can you believe it? That's it essentially. Easy as that, right? That's how easy it is. All you have to do is just wait on whichever time frame that you operate on. Once a zone has been established, wait for price to come back within that specified time and take your trade. That's it. If it doesn't happen, move over to another time frame. See if price comes back, and well, if you have a zone, provided that you have a valid zone, wait for price to come back within that specified time. If it doesn't, move over to another time frame and wait for price to come back. Just wait for price to respect that respective time frame's return time, and then you can take the trade, because more often than not, it works out pretty well. Now, so that's it, guys. So thanks once again for watching, and to every single one of you guys who've subscribed, I really, really appreciate it. If you're new and you've just come across this channel, please hit that subscribe button, and I'll keep churning out the content. Yeah, I'll keep churning out the content to the best of my ability. And remember, guys, like the videos, leave your comments. Previously, I just didn't know that there's an app that can help me that can help me manage my comments. So if you leave your comments, I'll get to it almost immediately, almost immediately, because it's linked to my phone now. So yeah, thanks once again to each and every one of you guys. Continue to like the videos, leave your comments, subscribe, and I'll do my best to respond to all of your comments. And thanks again for your subscriptions. Thanks again for your time. Really appreciate it. Until the next tutorial, it's been good. I'm out.